So sales of GLP-1 products have been proliferating, helping Novo Nordisk's revenue increase. However, that hasn't helped its stock price, which is down 8% year to date in 2026. Of course, I'm upset about that because I ranked Novo Nordisk stock as a buying opportunity, so I'm disappointed to see its underperformance. But is it still a buying opportunity, or should we cut ties with this company and look for better opportunities instead? Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So you can see the benefits of the weight loss treatments when we look at Novo Nordisk's revenue over a trailing 12-month period, going all the way back to 2017 when its revenues were around $16-17 billion. Those have nearly tripled to over 51.5 billion over the trailing 12-month period. Now, its sales growth do not look that great looking forward. In fact, for 2026, the estimates suggest that Novo Nordisk will experience a revenue decline of 6.3%, and then revenues are expected to increase by 2.5% in 2027 and another 6.4% in 2028. So the vast majority of growth stemming from the GLP-1 treatments that Novo has developed are likely behind the company. That being said, profitability remains excellent for Novo Nordisk. In the most recent update, it generated an operating profit margin of 45.4%. Now, its operating profit margins have been volatile over the previous decade, but have been above 40% and fluctuated between 41% and 47% in that time. The primary skill you're getting when you're investing in a pharmaceutical company like Novo Nordisk is the company's ability to research and develop treatments that generate hundreds of millions, if not billions of dollars in revenue and profits. So you're not just depending on what's currently available and what they're generating revenue on right now, but you're investing in the company's ability to continue to innovate, to continue to find new products, develop new drugs in their pipeline that will subsequently generate billions of dollars in revenue. Novo Nordisk has been around a long time. They've got great skill and a lot of learning in this category. It's reasonable to assume that they'll continue developing treatments, maybe not as popular and maybe not as well received as the GLP-1 treatments. Those have been truly innovative, but perhaps in another category. So one of the more troubling trends to look at is Novo Nordisk's returns on invested capital, which have been on a downward trajectory. In the most recent update, it totaled 37%, but a decade ago, it was above 80%. Still, a return on invested capital of 37% is excellent, especially for a pharmaceutical company which has a relatively low beta, which means its weighted average cost of capital is also low. Novo Nordisk has a nearly 4-to-1 ROIC to WACC ratio, even at these lower levels. But what's concerning is these levels continue trending downward, because if it keeps going in this direction, at some point the company is going to be losing shareholder value. That means the capital that the company is using, mostly in research and development, is not bringing back sufficient profits to offset the opportunity cost of that capital. And that's a dangerous place to be in. And when investors see a trend line moving downward like this, it raises a lot of concerns. So along the lines of its return on invested capital declining, also its forward price to earnings ratio has been in decline, only recently recovering slightly. It's now trading at a forward price to earnings of 14.14, which is near the lowest level this stock has traded for according to this valuation metric, going back to 2023. Of course, back in 2023, investors were more enthusiastic about this business because it was just in the beginning stages of getting that increasing revenue from the GLP-1 treatments. And now those sales are plateauing, and the revenue growth for the company is expected to go backwards this year in 2026. I updated my discounted cash flow valuation for Novo Nordisk, and I revised lower my free cash flow estimates for the company going forward by about 500 million per year. That's about 5% of the company's estimated free cash flow in 2026 and 2027, when they're expected to generate 9.3 and 11.3 billion dollars in free cash flow respectively. And after I made these revisions, the fair value estimate declined, but it's still well above the current market price. I calculated a fair value of $123 for Novo Nordisk, and the current market price is 47. So the stock looks undervalued, whether I'm measuring on a discounted cash flow basis or whether I'm measuring using the forward market multiple. So I mentioned that I've had Novo stock rated as a buy, and I'm disappointed in the underperformance year to date. I last updated this rating on February 16th, 2026. And today I will be reiterating the buy rating on Novo Nordisk. Although I will say, and I might be biased here, I own Eli Lilly stock and I prefer Eli Lilly stock over Novo Nordisk. If I was picking between the two, I would prefer taking Eli Lilly over Novo Nordisk, but I think they're both excellent buying opportunities at current prices.